Hey everybody, it's Cassandra Bickle with ERA Sunrise Realty. I'm here with Catherine France with Element Home Loans. And we just wanted to come to you today to kind of talk about what's going on in the economy. So Catherine, we had some pretty big news the other day about the economy here in the U.S., right?
Yeah, so on Friday, some stuff started happening, and Silicon Valley Bank as well as Signature Bank failed, and so the Federal Reserve is actually going to be bailing them out to try to replace some of those funds that were lost.
And when we're talking about the bank failing, obviously, like the doors didn't get shut down and they're just completely out of business because there's a lot of people that have millions of dollars of money in there. Mm-hmm. Can you explain a little bit about what that means?
Yeah, so Silicon Valley specifically invested in a lot of smaller startup tech businesses, and they had a lot of different investments that weren't necessarily the best kind of investments. So once inflation started going up, that money started getting more expensive, which caused them to not have as large of a profit margin on lending out funds. So it caused them to lose money rather than make money.
Okay. Now we hear that the feds are going to bail them out. Now, typically when you've got the Federal Reserve backing any bank, you're protected up to $250,000. But that's not the case here, correct?
From what I understand, the Federal Reserve is planning on bailing out a little bit more than that amount, because there's a lot of people that had millions of dollars in the bank. So they're going to try to recoup those funds for those depositors, for Silicon Valley specifically.
So let's talk about, we're in the real estate business, you're in mortgages, I'm in real estate side of it. Let's talk about the short term. What is this going to have on the effect on our clients and us here in the next week to 2 weeks here?
So we actually already saw the blip in the rates as of yesterday and a little bit more today. There was a little bit of a dip as a result of that. Anytime you hear bad news in the economy, it's good news for rates. But the consumer price index, what's indicating inflation, is actually going to have a larger impact on rates long term than this bank failing because of bad investments.
Okay, so we've got good news for us.
Mm-hmm.
Now, what are we going to see over the next few weeks to the next few months? Is that still going to be good news for us?
Short term, not necessarily. Long term, probably a little bit better. Inflation was higher than expected, than anticipated, which means that the Fed still needs to increase rates a little bit more to try to slow down inflation. Okay. The good news is they had already planned on increasing it by 0.5%, and now they're talking about increasing it only by 0.25%. Now that's kind of already built into a lot of the mortgage rates, so we may not actually feel that effect until, or may not feel that effect at all. But by doing this, what they're trying to do is level off inflation and make it, slow it down just a little bit and bring it back down to normal, and try to equalize that.
Okay, and so when we're talking earlier in layman's terms, mm-hmm. A lot of the economy is being pushed because of high rent prices.
That's right. So the consumer price index is made up of a lot of different indicators. 40% of that is what we call shelter. And that's rent prices for apartments, condos, single family homes, how much people are paying to live in a place specifically for rent prices. And that's been what's driving inflation up a lot higher. So by increasing that base rate for mortgages, they're hoping to bring down rent payments.
Okay. So this is a lot of geek speak, a lot of numbers. Catherine is my go-to for being a numbers person. Anything that you have on anything else that we should know about in the next few months with all these bailouts?
I would look forward to May of this year to see a more significant change in the rates. Experts are anticipating for things to start leveling off in May, so we may see a little bit of a break in inflation as well as mortgage rates by that time.
Okay, so today we're actually on Pi Day, so 3.14. I know you're a numbers nerd, and like I said, she's my go-to for all things numbers. So March 14th, where are rates kind of sitting at today? I didn't tell you we were going to ask this.
No, you didn't.
I just thought of this.
we're still seeing rates in probably about the mid sixes right now, depending on credit, down payment, loan type. I will say that we're actually seeing better rates for the same credit for government loans. So your FHA, your VA loans are actually trending better right now than a typical conventional loan, even for the same high credit. We have a lot of people that are opting for FHA right now.
Okay, and one other question. So we're in the sixes now. Do you see us going into the 7s to 8s this year? I'm blindsiding her with this one because we didn't talk about this.
I'm not sure we'll see it go up into the 8s. I wish I could tell you what would happen with the rates. If I could, I would retire next year.
Yeah, I hear you. I don't see it going back into the 4s though.
I'm not sure that it will, but a healthy market we'll see more in the 5s rather than this volatility that we've been seeing lately. So hopefully we'll see it regulate kind of high 5s, low 6s as we move into the year.
So here's just a personal question. I know I bought my first house about 2004, and my interest rate was 8%. Do you remember what your first interest rate was?
Mine was a lot lower because I bought my first house a lot later, but mine was at 4.25%.
Okay, my second one was 4.5%. So, and that was a government loan. So, still half the interest rate of what mine was.
Yes.
And just about. And so, 5.5%, 6%, 6.5%, still not horrible. When I first got in the business, it was typical to have 7 to 8%.
Mm-hmm.
And that was the first probably 6, 7, 8 years of my career. So, I didn't think they'd stay in the 3s and even the 2s as long as they did. But if you have any questions about the economy, mortgages, real estate, it's still a great time to buy because, as Catherine said, rent prices are continuing to go up. So if you can lock in your rate with your house, you're going to be able to project for the longer term with a more stable payment than these rent prices that keep going up, or having landlords blindside you with getting your notice to vacate and having to go find something else. So, anything else to add?
Just that you're absolutely right. The principal and interest payment will stay the same on your house unless you refinance. The only thing that's going to change could be your taxes and insurance. But
and I saw that with the last couple of years, my payment went up about $200, and that was solely the taxes and insurance, but it's still significantly below what any rent prices in either of the neighborhoods are.
Absolutely.
That and I know that it won't change too significant the next few years. I know my tax basis for the one house is locked in for, what is it, Cherokee County, 4 years. If you contest your tax bill and win, it's 4 years. They can't change it. So if you have any questions on that, give me a call, 678-266-0723. Check out the website at keytogeorgia.com. And Catherine, you want to leave your contact information?
Yeah, sure. Like she said, I'm with Element Home Loans. My best number is 706-530-5841.
And Catherine, real quick, what states are you licensed in?
We are licensed in Georgia, Florida, Tennessee, North Carolina, and Alabama. So most of the Southeast. Okay.
And you've done loans for people that I know in Georgia, Tennessee, and North Carolina. So I am licensed in Georgia, but through my referral network, I'm able to help you anywhere, not even just in the country, but anywhere in the world. So if you're looking at buying a house, selling a house, or doing anything with real estate on planet Earth, let me know and I can connect you to a great agent in your market. Hope you have a great day.
See ya.